Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. The USD got a boost recently from another set of hot data as the US job openings surprised to the upside, and the prices paid index in the ISM services PMI jumped to the highest level since 2023. The market's pricing didn't change much though, and Fed's Waller yesterday kept the rate cuts hopes alive, saying that the pace will be driven by inflation progress. Since the central bank has switched its focus back to inflation, the US CPI report next week should have a bigger influence on interest rates expectations than the US NFP tomorrow, barring big deviations, of course. On the JPY side, the BOJ left the interest rates unchanged as expected at the last policy meeting, but Governor Weda delivered a less hawkish than expected presser. In fact, he placed a great deal on wage data to decide on the timing of the next rate hike and added that the trend will become clearer in March or April. This made the market to price out the probabilities for a hike in January and push back once again to the next meeting, which is scheduled for March. Today, the Japanese wage data beat expectations, although real wage growth remains slightly negative. That gave the JPY a little boost, but nothing serious as we will need more data ahead of the March decision or a soft US CPI report. Now, on the daily chart, we can see that USD JPY is still consolidating around the recent highs, even though the price probed above the 158 resistance. From a risk management perspective, the buyers will have a better risk-reward setup around this major trend line, while the sellers will look for a break below the trend line to extend the drop into the 149 handle next. On the 4-hour chart, we can see more clearly the range-bound price action, with the price now trading above the 158 resistance. The buyers will likely step in around this level with a defined risk below it to position for a rally into the 160 handle. The sellers, on the other hand, will want to see the price falling back below the 158 level to target the 156 support next. On the 1-hour chart, there's not much else we can add here, as the buyers will look for a bounce on the 158 level and a rally into the 160 handle, while the sellers will look for a failure of the breakout and a run to the 156 support. These red lines define the average daily range for today. For the upcoming catalysts, tomorrow we conclude the week with the US NFP report.